trade. And let's talk about the broad market, and let's do some trading in energy stocks. Alan Nuckman here with us in studio for a Monday check-in. He's the chief market strategist at bullseyeoption.com. Alan, good morning, sir.
Good morning. I'm so glad to be here, actually.
Oh, thank you. I appreciate that.
Well, because of the weekend. You know, I can't watch any more basketball. It's too much.
Yeah.
It's too much, and I don't even gamble.
I was about to ask, how's your draft?
I don't gamble at all. I'm a probability guy, but it's painful to just watch all the nonsense. It's harder than working. I'm glad that the markets are back on. This is more relaxing.
I gotta be honest, I'm having a hard
basketball game.
I'm having a hard time believing you don't gamble on sports.
I'm not a gambler. I'm a probability guy.
That's fair. You can't buy in the money calls on
exactly
on March Madness.
You can't do lifestyle options to let you relax. I'm a relaxed guy. I want to be in position for the long term, take advantage of the markets. You know, I don't need all the short term nonsense. And this is a good example here. I've got my weekly sheet. What did we get last week? 2%. You know,
the grind continues.
The grind continues, up another 2%, up 3% in the NASDAQ. So, you know, new all-time highs in essentially all the indexes last week. So the momentum march continues.
Think that's the ideal pace, couple percent a week. Don't get too crazy. Don't open yourself up to blow off top risk.
That is still a lot. I mean, think about that.
Right.
I'm not great with math, but multiply that by 52 weeks.
Oh, fantastic. But as VIX breaks down, it seems like the slower pace is almost constructive in a way instead of like the screaming, upside.
And that's one of my points. First off, I want to thank my friend Ben for another reason I'm here. Because I didn't realize Friday was a holiday. I completely forgot. So now we only got a couple of days. And you and Ben were talking last week about the spike in yields in the 10-year note, and I said, let's relax.
Well, his yields didn't spike last week.
Well, we got up to 4.3.
And they got rejected.
4.5 and reject, exactly, test and reject, and that's what I love to see. So we're back inside that range now, and that's very, very positive.
That gives us kind of fresh momentum to see that threat still is under
But to get back to your VIX commentary, the low in the VIX is 8.5, okay? So we are a huge amount above that. So that means there's a lot of potential grind to the downside in the VIX, meaning a grind to the upside in stocks. So if you look at that, I look at that as very much positive. We're nowhere near the all-time low in the VIX, even though we're at all-time highs in the S&P.
We've talked about this a few times here and there over the last 6 months as the market's grinded higher, that maybe a VIX single digit is a world of possibility.
Very much so. 8.5 was the low. So who's to say?
Think that could happen?
Yeah, 9.99. I'm not necessarily calling for another low in the VIX, but I mean, you know, we mentioned a long time ago, S&P 6,000 is the technical target. Take that drop from the old high, add it on top of that old top, and that's what S&P 6,000. And that was a 25% call, and we're halfway there.
It's been working quite well thus far. You're trading energy stocks today, rig, as the commodity is firmed up. Is that why?
Well, it's a sector that we've been mentioning as a laggard that had some catch-up to do. Now, if you look at XLE, the energy sector, the ETF that tracks it, we're just made new highs today. So new one-year highs today. So they made a huge comeback. Look at Exxon. Look at Schlumberger. Look at Halliburton. Look at all the boys. All the boys are now booming, okay? So we've got a big, big bounce off this bottom. Now, rig hasn't performed as well yet, but I like the math behind it, and I'm just a math probability guy, and all I want to do is set up for success. So this is a stock that's been between 5 and 9 since January 2023, so that's a year and a couple of months, right? But what I saw was my indicator, which is more important, is I saw the leveraged buying now, which is continuing, leverage long positioning, and also the bullish divergence. When it made its low in February, it did not make new highs in volatility. So the fear factor wasn't there. That's a sign of a sentiment shift often. And this stock is still 30% off its September top.
Okay. And to your point, some of the giants have been really ripping.
Yes.
The rig chart doesn't look quite as momentous, but it's in the same category.
Yet.
On the same direction.
We played this game before. I'm a yet guy. Okay, I'm not a jumping on NVIDIA.
You're the catch-up trade. You like to watch the stocks that catch up.
In a bull market, that's what we've been looking to do. We've been waiting for the small caps to catch up. They did, and so that was a confirmation that everybody is ready to go. So looking at this, I saw the bullish divergence. Like I said, between 5 and 9. Midpoint is 7.
Okay.
So if we get to that 7 midpoint, what it should do is get us back up to the range top at 9. So I like that, and a breakout of the range target is 13. Now this stock was a more expensive stock years and years ago. So there's a lot here, but the way to play is equally as important as the stock itself.
What's the strike you're looking at?
$4.
$4.
$4. It's deep in the money.
That's
now,
real.
But then it's $2 in the money.
$2 in the money.
It's trading for $2.40 or something like that. So my expiration break even is 40 cents away. And the best part, you asked the strike, but you didn't ask the duration.
How long?
January.
Okay.
So that's 300 days.
Wow.
So 300 days, break even's 40 cents away.
Transocean you're going to be out on the rig. A year long. You're going to be living in the
that's my point.
Pacific.
I'm not going to lose any sleep over this.
Okay.
It hasn't been to 4 since 2022. So there's a lot of the math that makes it easier to play. And I'm not that buzzer beater bucket is not going to worry me.
Okay. Well, as you said, you called it a lifestyle option earlier.
Right. It fits my lifestyle.
Okay. I'm saying when you do it in Transocean, that's the lifestyles. You're on the rig. You are out there. Just
those guys make a lot of money.
Floating, waiting.
Those guys make a lot of money.
Well, because they've got so much time to trade.
Yeah,
and buy in the money call options.
There you go. They can take advantage, and that's the beauty. We want to take advantage of what the markets have to offer. I don't want to work for the markets. I want the markets to work for me.
All right. The money call $4 on the strike for a little less than a year, 300 days, roughly into the January 2025 strike. All right. Thanks, Alan Nuckman, bullseyeoption.com. for the bullish trade and the bullish analysis too, and on the right track. Thanks, Alan. When we come back, we're going to get into some stock picks, some details on a few companies as we get stock specific in our analysis, away from some of the macro discussion. It's looking like it's shaping up to be a good day here. Here's how I know. NVIDIA's now up 2.5%. More green showing up in big tech now. You've got NVIDIA, Netflix, Amazon, Tesla, all higher. Bitcoin dripping 8.5%. The dollar still down on the day. Not a mystery here that things are generally improving since the opening bell. NASDAQ and S&P pretty close to going positive. We'll be right back.